Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrency, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. In today's video breakdown, we're going to go over the Cardano price action from yesterday, the buy position that I took, where I took partials at, why I took those partials, closed trade, and why I'm looking to repump the capital that I made yesterday on ADA Cardano back into the market. So stick around for this YouTube video. It is going to give you a very clear perspective on how to read the charts, give you guys some gems. I'm also going to read some articles for you all just to show you all how here on CYPRX, we do the opposite of what the retail herd is doing. All right. So let's just start off with that before I go into the price action breakdown from yesterday's trade. I want to lead you over to these two articles from the Daily Huddle. Now, these articles came out a few days ago. One came out on April 21st, so we're going to look back at the charts and compare this to April 21st price action just to show you all what we do here at CYPRX, and that's trade against the retail herd's mindset. It's from April 21st, found in the Daily Huddle, and it reads, and it's just, the title is hilarious. Is Cardano about to break out? Analytics firm says traders feel confident about ADA. I have a significant area marked off for you all that I thought was just hilarious to compare that with the charts. Traders are currently feeling positive about Cardano ADA despite a grueling 6 months of bearish price action, according to the crypto analytics firm Sentiment. In a new tweet, Sentiment notes that the growing sentiment towards ADA has surged to its almost positive levels since mid-November when the Ethereum competitor was trading around $2. Scrolling down here, I highlighted this for you all. Cardano has enjoyed a modest 6% price rise in the past 24 hours, and traders have been itching for the 9th market cap ranked asset to break out. So when I read this, I highlighted it. Again, if we look, when this was on April 21st, let's just go over to the charts. It says traders were itching for a breakout. Understand what I've been trying to teach you guys on this YouTube channel. If you do what the herd is doing, you are going to get annihilated. So let's go when this article was released, April 21st. Let's go look at the charts. I just want to show you guys how insane this is, okay? We're going to go over to when this article was released on Cardano ADA on April 21st. And I want to show you all what happened, all right? So again, retail traders are itching for a breakout. When a retail trader reads an article like this and they also see retail herd mindset ideology in the charts via this trend line, look right here. Here's April 21st. We see trend line liquidity. So buyers were attempting to buy all of this bullish price action, right? They're FOMOing out. They're seeing all of this bullish momentum. They're like, oh my gosh, we've broken a high. Let's buy some Cardano. Here's April 21st when that article came out. Analytics firm says a breakout is intimate on ADA. Right here. And what can we see? Trendline liquidity. The banking institutions knew that people were buying the hype. They knew that people were chasing bullish candlesticks. And since that article came out on April 21st, price has completely depreciated in value over 14%. Okay. Just to show you guys that if you do what the retail herd is doing, what 90% of everybody else is doing, okay, you're going to get capped out. So hopefully nobody bought this price appreciation little buy trap right here. I'm going to go into detail as to why the market is still respecting bearish order flow. I'm also going to give you guys some Cardano targets. So if you are a Cardano holder or trader, stick around for this video because my bullish perspective on Cardano makes logical sense, but we might see some lower price targets. So I have another area highlighted on the charts for you guys right here. Analytics firm says breakout ADA price ripe for a rally. So this is now article number 2 that the retail herd is utilizing to speculate their own trading decisions. All right. So look at this. Cardano ripe for a rally as ADA hits prime opportunity zone for bulls, according to analytics firm. So here again, we see another analytics firm. Now these vocabulary words in the market, when retail herd mindset traders read this stuff, they're like, oh my gosh, an analytics firm said this. They must be right. Wrong. No, never base your judgment off of something that you read or see on the internet. Learn technical analysis properly. The charts tell you every single thing that you need to know about what price action could possibly do in the future. I'm telling you right now, you don't need articles, you don't need fundamentals. The charts say it all. Okay. So April 24th, 2022, we see the article headline, ripe for a rally. So let's head over to the charts, April 24th. This is when that article came out right here. Look at this. We see what? Early manipulation in the New York session, and then boom, the banking institutions dumped. Now I told you guys in yesterday's video, and it wasn't a big dump, okay, but they did dump. They depreciated in value about 7%. I told you guys in yesterday's video why we were able to buy this area, and then now in today's video, I'm going to show you all why we took partials because of a market reversal that we spotted based off of logic in the market. So let's go down to the lower time frame. If you guys are enjoying this video so far, I'm attempting to spread crypto awareness to really show you all, again, how manipulation information is installed into the market for the banking institutions, the elites, the whales to profit off of what the retail herd is doing. You see the retail herd reading these articles, buying these quote unquote dips or these bullish candlesticks because they're bullish candlestick chasers, and now your portfolio is depreciating in value. Again, if you want to avoid all of that and you want to trade with a more superior level of knowledge and information, again, guys, that link is in the description down below. You can utilize the technical analysis methodologies that I teach to hopefully potentially build yourself a solid, stable foundation in the cryptocurrency markets. Nothing that I constitute as financial advice. Everything that I give is just my perspective in the market and what it is that I see. Hopefully it rubs off on you. I hope that this YouTube channel is really helping you guys out. I'm giving you guys clear-cut clarity. Nobody else on YouTube is doing this. Everybody's just giving you bullish perspectives, bullish jargon, blah, 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 blah. Prices going up. Long term, yes, we can see that happening. But as crypto traders, if you're going to be involved in this market, mature in this market, attempt to really involve yourself in this market properly so that way you can be part of that herd that comes out on top, because we will be a community of cryptocurrency traders. We will be profitable long term for the people that stick around and actually put their best foot forward to learn what it is that you're doing. But the people that just want to make a quick buck, the people that want to become overnight millionaires without doing any valued research, you're going to get executed in this market. You're going to literally put money into this market and it's going to disappear right before your eyes. However, people on my team and myself, we are sitting solid because we know when to pump money into this market, when to take profit, when to allocate the money that we've made back into the market to make more money. It's that simplistic, and it's a roller coaster ride. But I'm telling you right now, if this YouTube channel and things that I'm saying to you all are clicking, reach out to me, ask about the mentorship. I can even video share, screen share with you on a Zoom call to show you what you'll have access to. Take the initiative. This is the time to inform yourself. This is a new wave of knowledge and information. Let's go down to the lower time frame. Sorry for that rant. I just get so passionate, man, because it sucks to see that the freaking Daily Huddle is putting out now improper information. You guys, we have two analytics firms saying that a bullish breakout is going to happen, and you guys see a 14% decline in the portfolio. If you are open-minded individuals, you guys have to ask yourselves, is something up? Yes, there is, okay? Again, work behind the curtains. You never know what's really happening behind the scenes. And I'll tell you right now, behind the scenes, the elites are working together. They are in control of this market. Smart money are the ones that move this market, and they know where your positions are. You want to move in tandem with what the banking institutions and the whales are doing, not what the retail herd is doing. So in yesterday's buy position, why we closed out, took full profit, and why we are going and looking to pump the capital that we made back into the market on ADA. I told you guys that we entered into a position on Coinbase on ADA. Well, here was that position. It was during London session. Well, I had explained to you guys yesterday, if we go to the 3-hour chart, why we were buying in this area. We saw a liquidity grab beneath previous lows, and we tapped into an area. This blue line that I had marked off is an area where the banking institutions from New York session purchased from the previous day. I'll go ahead and I'll show that to you all right now just by hitting this replay tool. I have my session indicators marked off. You guys can see when I scroll in, again, the ideology behind the fact that the banking institutions piggyback off of each other. We can see the manipulation right here in the form of trendline liquidity. We can see an area in the past where the banking institutions purchased during New York session. Here's New York session. Here's where they purchased around 82 to 83 cents in that general vicinity. And now we go into current price action. You guys can see how price is respecting this level. Again, showing you guys a realistic approach as to why banking institutions are purchasing from these areas. So down beneath this 83 cent psychological level, I'm going to get into a target, a bearish target that could come into fruition here in the near future if this level does not hold. But back to why we took partials. Let's go to the lower time frame to kind of show you guys a more in-depth perspective on how we were able to identify that this was still respecting bearish order flow based off of logic. So we were able to capitalize on a buy position here based on higher time frame potential discount. You see the market coming into that blue area, but now we see a bullish impulse. Well, managing your trades, you have to assume that the market isn't going to continue up for forever. So when we had an alarm set and triggered from this high, again, the ideology behind the market creating a higher high and higher low formation to continue an uptrend, we can see that that failed to happen here. So once the market violated this high, we are in what's called, or what I like to call, a danger area, where we do not know if once the market taps into the liquidity above these highs, we do not know if the market is going to decide to go up or reverse after grabbing that liquidity and go back to the downside. So we have to be mindful once trades, if you're in a trade, comes into certain areas of liquidity, so that way you can properly manage your trade. Well, we properly managed this trade perfectly. We executed a full close on this position. We took partials. Again, I say partials because our overall target area was all the way up here. Obviously, of course, you can see that we did not make it to that level, and we took and closed the money from this trade, protecting our capital. And now we're willing, now that the market has retraced into another discounted area, to potentially pump capital back into this market. But let's go over what happened in this area and why we were able to identify a reversal. We can see when the daily candlestick opened prior to Asia session right here. Okay, we can see manipulation. We also see that the market created a high above a previous area of liquidity, which would be another market structure high. Now that the market has potentially quote unquote grabbed liquidity, we also rejected a psychological level, the 90-cent psych level to the T. Okay, if I just go ahead and I round this off for you all, you can see that this is the 90-cent psychological level. So here at CYPRX, we look at this as a potential reversal pattern, or a potential reversal could come into fruition. Why? Because we're starting to create downtrend scenarios or downtrend confluences, which would be a grab of liquidity above a previous high. We know that in order for the market to go lower, it must first go higher. Well, this is the ideology behind that. The market has gone higher, so now it could and has the potential to go lower. Now we've rejected a psychological level, so now that's the second confluence. First confluence, we are in the manipulation window during Asia session. We see buyers early on in the session. Second confluence, we are rejecting a psychological level. Third confluence, we are tapping into a potential area of liquidity where we know previous orders lie, and people that are also willing to activate buy stops above these highs have now been activated. So the market has tapped into liquidity. All right. Once we reject the psychological level, we come into the London session. London session failed to break the Asia session high. So now this is the daily candlestick wick high right here. If you went to the daily candlestick, this would be the wick high. London session failed to break that high, and we created the definition of a downtrend. As soon as we created the definition of a downtrend, we took and closed the entire trade, and now we're waiting and sitting on our hands to see if we can potentially pump capital back into this market, either where we are operating at right now or look to see for further discount. So look at this. Here's the definition of a downtrend. We failed to break the previous high right here. Okay, so this is a grab of liquidity, lower low, lower high formation as of right now. Once price broke this low right here, we closed the trade because this is a lower low, lower high, lower low, lower high formation. This is the definition of a downtrend or the start of a reversal. We were able to identify that here in CYPRX and close this trade, and look at what that did for us. Okay, we capitalized on making this much more profit, aside from being cocky and greedy and not closing our trade, not understanding how the markets really work. We had profit, we took it, and now we're willing to potentially pump capital back into this market if we see a reversal pattern. A reversal pattern would be a hold and bullish close above 83 cents, which is the previous low. So this would be the market telling us that it's creating a higher low if it does hold. And then we will look to see if we can get a fractal break in structure. We have two structure highs here. We would need to see the market break back above these highs and then maintain a higher high, higher low formational pattern. If we get that, then we'll start to pump capital back into ADA. And if not, we already have an area marked off for you guys on the charts, the higher time frame discounted regions where we see New York session purchased from in the past. That psychological level right now holds at 78 cents. So we're looking for either ADA to hold this bullish level, where if we get a bullish reversal pattern, we will look to pump capital back into this market. And if not, we will wait for a further depreciation in value to look for that same bullish pattern at these lower price levels. Again, this is properly dollar cost averaging into Cardano ADA. Nothing that I constitute here is financial advice. Now, let me give you guys another perspective on where we would need to break to confirm any type of bullish momentum. I think ADA in the next 2 to 3 months is going to push back above $1. We're looking at around 20 to 23% gains from where current price action is right now. Let me just go ahead and measure that out for you guys. Boom. So yeah, around 21, 22, 23% into $1. Okay. The reason why is because if we look, and this is again going to blow your guys' mind. This is a bullish perspective or a proper bullish area where we would need to break above a psychological level to confirm any type of higher time frame reversal. So I'm going to go to the hourly chart and I'm just going to show you all what it is that I'm talking about. This is the last significant area before the market decided to reverse. Same pattern on the lower time frame that we see here, the market created here, where it showed us a willingness to go higher, to grab liquidity. You guys see the same confluences aligning, right? You guys see how on the lower time frame it's the same exact pattern. Again, the market must go higher to then go lower, as above, so below. It grabbed liquidity from highs, showed us the bearish pattern where we see a lower low, break in structure, lower high, lower low formation. Same thing I just went over, you guys. Here's that pattern: lower low, lower high, lower low formation after the market grabbed liquidity. Okay, so where is that significant psychological level at? I have a little eye marker here for you guys because this would be our first bullish target. And if the market makers we know are seeking to grab liquidity above highs and beneath lows, we know that the market makers would need to tag psych levels above these highs, so we can aim to target anywhere between 98 cents to $1. If we do see a bullish reversal, the market starts to create the definition of an uptrend, higher high, higher lows, we would look to see the price of Cardano come to attack liquidity, which would be anywhere between 98 cents to $1. So if we do hold these lower price levels, the rest of the market starts to recover, Bitcoin starts to pick up in price, things of that nature, we could see a price push on 88 into $1. But we need to be mindful so that we're properly dollar cost averaging at discounted prices. You guys can see here how every single time the news talked about ADA Cardano, the banks and institutions, the whales, did the opposite. You guys, obviously, of course, watching this YouTube channel, I'm hopefully saving your portfolio a lot of headache. If you're still here this far and you've liked this breakdown, this in-depth analysis, please smash that like button, subscribe to the YouTube channel. It does help boost the algorithm and it is free to do so. If you all want a little bit more in-depth and advanced mentoring program that really shows you how to read the markets via technical analysis properly, again, guys, that link is in the description down below. Blessings to you all. I hope that, as always, this video breakdown helped, just like the other ones, I assume do so. We reached 5,000 YouTube subscribers, so towards the end of this week, I will release a YouTube video going over Casper and telling you all how you can involve yourself in the 1,000 coin Casper giveaway that we are going to host for reaching 5,000 YouTube subs. I couldn't thank you guys enough. Make sure that you follow me on Twitter. As always, blessings to you all. I appreciate the love and the support. Have a good rest of your week, and I'll see you guys next time.